Home prices, are they up? Are they down? Where are they headed in 2026? In this video, I'm going to break down what experts are saying, because as you probably know, record home prices across the last couple of years, mortgage rates have gone up, affordability has been an issue. So everybody wants to know, if I buy a house now, if I stretch, from affordability standpoint, what's going to happen with the price of this home? In this video, I'm going to give you my take as a mortgage broker who deals with people across 48 different states. I'm going to give you the experts' take and what they say is going to happen with mortgage rates and also home prices in the future. So let's jump right in. And first and foremost, we got to talk about like market context and what's driving home prices right now, right? Home prices are shaped by a few powerful forces that are beyond my control, even though you guys think that, I should be in control of where mortgage rates go. Unfortunately, I can't. So mortgage rates, supply constraints, buyer demand, and, macroeconomic conditions like inflation, wages, and economic growth. So on rates, I'm sorry to inform you, I wish I had better news. Many experts believe that mortgage rates, they might gradually ease, but they're going to remain elevated. There's a chance that we go through all of 2026 and mortgage rates don't go below 6%. So anybody who opened for a sub 5% mortgage rate anytime in the near future, it's just, quite frankly, probably unlikely to happen. Then on the supply side, which is really something that's keeping home prices elevated, there's still a ton of buyers that are quote unquote locked in, right? They're sitting in their low fixed rate mortgages. And even if they wanted to move or could move, the math is telling them that they should stay. And, stats don't lie. They are staying. Buyers aren't moving around as often, as much. When it comes to demand, and I know this from a very personal level from my mortgage business, buyers are on the sidelines in many markets. Affordability is really holding them back, where they'd like to buy, some of them even qualify to buy, but $4,400, $4,600 a month, they just can't quite, pull the trigger because they're going to be stretched if they buy. And then, one thing to look at too, because I talk a lot about California, talk a lot about my, market where I do the most amount of purchase business, but on a regional scale, like what happens in Arizona and Texas and Florida in the coming years is going to look way different than, what happens in, say, New York, Seattle, or San Francisco. So you got to remember, all this stuff is regional, right? There's no one size fits all. Home market is going to do X, Y, or Z, but, we can outline, the overall feel of the market and what we expect going forward. So let me take a quick peek at these notes, experts are saying, and I've got some notes here about not only what they're saying, but a couple different scenarios, because we can't predict with absolute certainty, but we can say, maybe this happens, maybe that happens. And you tell me what you think. You think that that's, totally preposterous that home prices continue to climb, or you think it's wild to think that home prices could decline by 5%. But here's some scenarios to think about, right? Modest uptrend, which I believe is what a lot of markets are seeing right now, like 2 to 4% uptrend in home prices. They creep upward. This is going to happen in a lot of markets that just have strong fundamentals. They got good jobs, you got good schools. There are places that people want to live, right? Things that are going to drive this, if rates continue to kind of ease and make it, just a smidgen more affordable, that's going to continue the demand that's needed to keep those prices elevated. And, let me skip to the moderate decline, some cases for home prices going down by 3 to 5%. And this could be in some higher cost markets. In my opinion, this is happening in the markets that were super, super hot during, this latest boom, where we saw record low interest rates and mass migration to markets like Florida and Texas. Those markets are pulling back and, could do so even more if rates go up. I saw some predictions that rates could go up to the 7% over the next, year or two, right? And as they came down to 6, people think they just continue to go down. That's not how it works. Rates go back to 7. If, recession hits or get worse, credit tightens, more inventory comes in the market because of distressed homeowners having to sell, that is a case for moderate declines, right? So let me tell you what, the big census.gov, JP Morgan Chase, Redfin is saying, right? Redfin is letting us know that as of August 2025, home prices are up 1.5%. That's flat, right? That's flat for all intents and purposes. New home sales in August of 2025, this is the latest data, I'm talking to you in September, up 4.7% month to month and 1.9% year over year. So in these markets where builders are building, they're still selling homes. So it's a good case for that demand is still there. And for anybody who thinks that demand just disappears when rates are high and when, quote unquote, affordability is tough for many, like there's still plenty of demand out there. JP Morgan expects 3% home growth in 2025. We'll see. I'm not sure where the final numbers are going to land for that, but let's move on. Let's move on to what it means for buyers, sellers, and investors. For buyers, in a scenario where we get this modest uptrend, 2 to 4% home price appreciation, buying now allows you to lock in. And if rates come down, I think that's the best case for home prices seeing a little bit of an uptick. You'll be locked into that lower price, but still able to refinance into a lower rate later and not be in a situation where you're competing against multiple offers. There's so many markets right now where it feels soft. It feels like it's kind of easier than it's ever been as a buyer. That might not always be the case, especially if rates come down and demand, kind of floods back into the market. So in a market that's, flat or declining, especially in markets where there's not a lot of jobs or they built like gangbusters, there's parts of Texas where they built a lot of homes. There's going to be a lot of buying opportunities. So pay attention to that if you're in those markets. I've got some buyers that are out there. They're offering 20% below list. They're not getting their offer accepted at that, but like you try that enough times, you start negotiations and you do a little bit back and forth, you're going to uncover some either motivated sellers or in some cases motivated builders, institutions that are going to give you, quite a bit of concession. And lastly, for buyers, like pay close attention to mortgage rates. Like mortgage rates really, really more than ever affect this whole supply and demand equation, because demand has got the emergency brake pulled, in my opinion. And when mortgage rates tick down, the emergency brake gets let off, right? And a lot of sideline demand that's just sitting there after the emergency brake of the steep uptick in rates, you're going to see hundreds of thousands, if not millions of buyers, come back into the market, and 0.5%, 0.75% could really change the whole dynamic of the market. All right, for sellers, some quick advice. First and foremost, you have to talk to a great real estate agent who gives you good, honest advice. A real estate agent that tells you everything you want to hear is the worst thing you could get. I see it all too often, and I'm going to share a story here one of these days about sellers connecting with agents who just do them the biggest disservice. Their home sits on the market for 120 days and they have no idea why. I know why. But anyway, if your local market is healthy, you price competitively, you sell your house within 30 days and you're done. You don't have to worry about being undercut in the future by neighbors who have to, sell and they're distressed and they're pricing lower than you are. And, it's hurting your home value. So yeah, important as ever to price right, have an agent who will help coach you on how to do that. Renovation, staging, just having a show-ready home is important. And I'm telling you, I used to not believe in that stuff as much as I do now, but the ugly ducklings that just get a sign slapped in the front yard, those things are sitting. All right, investors, what should you guys be looking out for? Be cautious in certain markets that, expanded rapidly during the boom. They're going to be more vulnerable to corrections. We've already seen it, right? Oversupply in some areas and just, the bottom's falling out because there's a lot of supply. There's not as much demand. Maybe insurance costs have gone crazy. Like there's some markets in Florida that you should be very skeptical and scared of. And then, stress test your scenarios as an investor is another piece of advice. Like if you had to hold something for 12 or 24 months longer than planned, I'm seeing flippers get in some trouble where they peg an after repair value that's not realistic, like think about what happens if you have to hold this thing. Cause I've got investors that are calling me now, like I got to get out of hard money and I got to get into a DSCR loan. It's going to cost them $500 a month after they refinance this thing. So they're going to be, bleeding monthly. All right. Key indicators to monitor: mortgage rates and spreads, right? Like the 30-year stays above 6%. That's a drag on the housing market for sure. Inventory and months of supply. If listings jump, if supply comes to the market, could really, have an impact on the market, which quite honestly for sellers for buyers and investors is a good thing, right? Like go out there and get some deals. New construction, like there's a lot of it. And a lot of builders are smart and strategic about where they're building, but in some areas it's just oversupplied. Go out there and check to make sure you're not, buying a home that a builder's, giving you $25,000 in incentive, but pricing it $100,000 more than it should be priced at. Labor, wage growth, unemployment, those things affect buyer capacity. So, you got to pay attention to that in any market you're buying in. And then of course, policy, tax, and lending shocks. Like people take for granted that lending policy could change, right? There could be a change in credit rules. Credit could tighten if we go into recession and lenders, tighten their belt and they're not as, lenient with lending. That affects the market in a major way. It wouldn't be a good thing for the real estate market if already in a constrained, low volume environment, it was even harder to get home loans. That would be tough. I think back to like 2010 and 11, and it was hard to get financing. I wasn't even in mortgage yet. And I know it because everything was on sale. I was self-employed and trying to get loans to buy these houses at a discount. And it was not easy. All right. So in closing, what's the bottom line? Like most forecasts you see out there are leaning towards modest price growth. And so in most parts of the country, I think that you're flat or you're seeing modest growth. There's going to be some stagnation over the next 12 or 18 months. There's going to be some markets that continue to kind of soften because they were overbuilt, over-migrated to, or the economic factors in that area just don't support this increase in prices and rates and everything. If the average wage in a certain county is $54,000 a year, like you can't have $600,000, $700,000 houses. It's just not sustainable. So watch out for all that stuff. Let me know what you're seeing in your local market. I'm truly interested. It is one of the most interesting times in real estate I've ever seen. I've paid attention to it for 12 years. We're in a market that I think not a lot of people are able to really put into words much of like, what market are we in, right? So leave your comments below. I'd love to hear from you. And if I can help in any way, I'd be more than happy to. GreatMortgageBroker.com. Connect with me and my team. We'll talk to you soon. Bye-bye.